Folks, as we talked in episode number 1 with Mr. Jonathan Twomley, there is a lot of pain, and unfortunately, we are probably very early in the pain in many parts of the commercial real estate market. But where there's chaos, where there's pain, there's actually also some opportunity. So maybe we should ask Jonathan, where is he sniffing or seeing or maybe feeling that there might be some opportunity brewing as we roll into 2024? What's going on?
Yeah. So listen, listen, I mean, there's a lot of doom and gloom, but there's also some, it's not all doom and gloom, right?
Yeah.
So the obvious thing is, there's going to be discounts in some of the hot markets just because of the market is going to have a big correction. But that aside, the interesting thing that you're seeing right now is it's kind of like a return to the way things used to be and always have been.
Yeah.
Right. You've got this cycle lasted such a long time that people forgot about the way that cycles usually operate. But when the cycle started, you had the common wisdom. And I'm talking about sort of like for bigger groups, institutional players and stuff. Common wisdom was, nobody in their right mind is investing outside of the big six markets, right? Because the big six markets, it's impossible to build. If you've got property there, you've got a privileged position, and even if you're buying at low cap rates, it doesn't matter because you're going to have really strong rent growth, and these markets are really going to weather whatever storm happens, right? And so it was only for the more kind of risk-on players that they were willing to go to places like Atlanta or
North
Texas
Carolina
or Florida or whatever that had where it was much easier to build, and when things and they tended to be more boomy and busty. So there were certain markets that were just known as boom and bust market. It's like Atlanta, famous boom and bust market. Orlando, famous boom and bust market. Phoenix, Las Vegas. These are like the markets that were the most famous for just having a big run up because it was so easy to build and then crashing because they would oversupply really easily. But the market cycle lasted so long and there was all this population growth in these markets that everyone sort of forgot about that. And they were just like, oh, why would you invest in New York or San Francisco or Los Angeles? Those places suck. You have to go to Dallas, right? And oh, look how hard, they have bad tenant laws and all sort of stuff. And like a million reasons why you should never invest in these places. Well, what's happening now? We're back to sort of where we always are at the end of a cycle. Those places where it's really easy to build are oversupplied. People are going to get foreclosed on. They're going to go into a bad real estate recession for commercial real estate. And everybody's looking around and going, well, where is the rent growth? Where is the rent growth? Well, New York, San Francisco, lots of California markets, Boston, and the Midwest, right? So what about the Midwest? Let's talk about the Midwest. The Midwest has been completely overlooked in all of this, right? Everybody craps on the coastal cities, praises Texas and Miami and stuff and Florida, and then just completely overlooked what was happening in the Midwest, which was that these markets were just slow and steady. They didn't have oversupply. They still had either decent population growth or the supply-demand balance remained favorable. And it was just all overlooked because there was nothing spectacular about it. There was nothing shiny about it. It was just plodding along, doing a good job. And everybody was, distracted by shiny objects. And so now what you're seeing is the people who had a Midwest strategy all along are doing fine. Yeah. They're not dealing with supply issues. They're not dealing with massive cap rate expansion, right? They're just, obviously interest rates are an issue, but they're not dealing also with the crazy insurance rates because they're not in the hurricane zones, right? And so these markets are looking real good right now. For the people who were in them already or all along, they're feeling pretty good at the moment. And there is, supply is increasing, but not as fast as the population. Same thing with New York. Like everybody has been decrying New York as a terrible place to invest. But if you look at the supply and everyone's leaving New York and they're all moving to Texas. But look, New York was like, I think it was definitely in the top 10, but maybe even in the top 3 for apartment deliveries. recently. So what's in the pipeline? The problem is not the problem. The thing about New York is if you're building the same amount of apartments as Dallas is, and you have
Yeah,
basically 4 times the population, right?
exactly.
You don't have a supply and demand problem, right? And
Yes.
so and this is so now we have, I just saw that there's like something like 26,000 apartments being delivered in New York, but the demand is like 30,000, right? So it's still undersupplying the market, even though it's like a record delivery, right? So whereas in Texas you've got record deliveries, and now you got 10% vacancy and people are moving up, right? That B property you thought was safe.
Yep.
Well, people are moving to A because the concessions are so good that they're like, hey, I can afford to live in the A property right now. So um, the bright spots are those kind of like slow and steady markets, or basically any market that people were overlooking when they were all distracted by the hot thing. And this is a topic that I think you and I have returned to over and over and over again. If you follow the crowd, you will get the results of the crowd, right? So while things are going well, it's fine. But then eventually, there's always comes a point where you realize that where the crowd is headed is right over the cliff, right?
Yeah,
And
that's the thing that I am very attuned to after getting wiped out in the stock market in 2000 or whenever that was. I get in the crowd and feel the crowd pushing me in one direction. I exit stage right, get out of the way.
yeah,
That's definitely
well,
served me well.
just like you said with what when you went to that meeting and everybody was a syndicator,
Yeah.
you know. And the thing is, listen, everybody I hear, like, you see some of these people who are now in the real deal for the wrong reason. Like, you would see them posting on LinkedIn not that long ago, like those quotes from Warren Buffett
Yeah.
about, sell when other
When the
people
tide
are,
goes out. Yeah.
yeah, and all this, all that wisdom, but they don't follow it, right?
Yeah.
They don't follow the wisdom. They do they
Even worse, they think they are following the wisdom. That would even be worse.
Well, yeah, and the thing is, and so it's like, or that, it's kind of like, the way that they think, like, to be greedy when others are scared is when, like, the data is showing problems, they're like, oh, I'm not scared, full steam ahead,
Go
now's the time
harder.
to buy,
Go
right?
harder.
And yeah, and they don't understand that, like, that's not what that means, right? It means, like, you know when everybody's telling you you're an idiot to be buying, that's like the time to be buying. Or when everybody's telling you're an idiot to be buying an X market, but you see that the data says otherwise, right? That's what you do. You don't sort of blindly spout these things. But that's where we were. And so if you followed the strategy of looking where other people are not looking, you are going to find value, and you're going to do well. And that's really what everybody should be doing, is trying to find those pockets that are overlooked. That's why I went to South Carolina a decade ago, because everybody was talking about Texas. And I was like, A, that scares me if everybody's talking about it. And B, hey, look at these demographics in South Carolina, right?
Yeah.
And so, and everybody was like, why South Carolina? Well, the data says it's good.
Yeah.
And so, you got to be looking for these opportunities. So I'm just like, kudos to all those people who are just plugging away in the Midwest and avoiding all the distraction. And everybody who's listening to this, if you can take away one thing from this episode, is ignore what everybody else is doing.
Yep.
And look for opportunities that are overlooked. And just because other people haven't seen them doesn't mean that they're bad. I think a lot of people think, oh, if it were good, somebody else would have taken it. That's not necessarily true, right?
True.
So, yeah.
Yeah, at the end of the day, I'm really hopeful that rationale comes back. I think the fact that financial engineers were rewarded and encouraged the last couple of years will end up hurting more people. So I'm glad that the good operators and the true people that are in the business of providing value will win. So I know you're one of them. Yeah, go ahead.
Yeah, no, I just one last point. I was thinking about this before we jumped on the call today. I think that I think lenders are going to be very wary about lending to any syndicators for the next 5 years.
Yeah,
like
I would think so.
It's gonna take like a bunch of new people cycling in and out of the business at the banks who don't remember what happened, and also just more the greed to replace the fear, which is going to take some time because we haven't even got to the bottom yet. Before they start issuing loans to new syndicators, or even and certainly the ones who got foreclosed on, or the ones who had a bad, those guys are not going to have an awfully hard time getting debt again. But they're not. It's going to look like what it looked like when I got into the business, which was I had a hard time getting debt for my deals because I was new, right? And so and it just always amazed me at after 2016, where it's like, how are these people, where do these people come from, and why are they finding it so easy to get this debt, right? Because I couldn't get
money was free, Jonathan. Money was free.
Yeah. So I think we're going to go back to that. Where the pendulum is going to swing in the other direction. The banks are going to be overly cautious. They're going to it's going to be very difficult for new syndicators to get debt, and that is going to depress the market further. Yep. And it's going to be good for people who can buy, but it's going to be hard for everybody else. And a lot of LPs are going to get burned, and they're never going to come back.
Never come back.
So yeah,
never come back. Where can people find you, Jonathan?
So if you would like to get on my investor list, please Google Two Bridges Asset Management LLC and fill out the investor form, and then jump on a call with me so we can talk things over. If you'd like to just kind of be part of my universe, you can find me at apartmentinvestorsclub.com. You can follow me on LinkedIn. You can also go to apartmentinvestorsclub.com and get my free download, which will get you on my email list.
Very cool. Thank you, sir.